It promises to be an interesting morning. A lot of reactions anticipated, but something that has reacted for a bit. Let's just dial back from the here and now to what's happened recently, right? And Strides Pharma is sprinting ahead of its peers, delivering about a 50% rally since the start of April. A lot of stocks have done that, but Strides has stood out because it's outpaced the broader Nifty Pharma index. US focus, margins, de-risking moves, well, a lot of things happening. Now, Varsha joins in because she's analyzed this very closely. Varsha, what's led this rally? Is it fundamental reasons and what's the outlook like?
Yeah, so basically it's a fundamental reason, but as you rightly said, if you see of Strides Pharma in the since April 7, the stock has given 53% returns to its investors, while Nifty Pharma was up 9% and Glenmark Pharma, which is the top stock in Nifty Pharma, is up only 42%. Let's see what is triggering this rally. One is the US business. So everything when it comes to Strides Pharma revolves around the US business and debt reduction. Let's see what are the expansion plans when it comes to US business. They want to aim $400 million of revenue in US in FY28, and this will be driven by 60 planned launches, including high value or rather high margin products. Now, only 71, the interesting point over here is only 71 of 260 filings are commercialized. That means showing significant potential that the company has in futures, and that's the reason they're giving a guidance of almost $400 million when it comes to US business. Now what they're doing is they're investing in controlled substances or nasal sprays where the opportunity is almost $600 to $700 million. Now this is for Strides Pharma, and these are high value, high margin products. So they are moving from low margin products to high margin products, and 7 to 8 of such launches are lined up in the next few years, rather in the next 3 years, and they are also moving away from partnership agreement, and they are relaunching their dormant portfolio, which will lead to increased market share. The next trigger point when it comes to Strides Pharma is the margins. Look at the margins from in FY22 a company had an EBITDA loss, and from there the margin trajectory has been fantastic, and one of the reasons is because of the decrease in interest cost and moving to high value, high margin products. Next, if you see, debt reduction is also one of the reasons why this company has been in focus, and Arun Kumar is known for his dealing with the investments and phasing out or existing or de-risking the business. If you see the recent agreement that Arun Kumar has done is spin-off when it comes to OneSource Specialty Pharma, and which is a major de-risking move that has been done by Arun Kumar, and which is also a value unlocking even for shareholders. Just on their business model, what Strides Pharma is famous for, so they avoid being first to launch in the market. They only launch the products where the market is stable, where they know that they can grab the market share, and this approach mitigates the volatility that every generic pharma companies goes through. And overall, if I want to talk about the revenue growth, so they're expecting a revenue growth at a CAGR of 12%. US market will contribute almost 52% of revenue share. Lastly, on the valuation, which is considering the guidance given by the company, if you see, EBITDA is expected at 1,000 crore, net profit is expected at 520 crore. So that comes, the EPS comes to it around 57 rupees at a 30x PE. Still, there's a lot of runway when it comes to a share price of Strides Pharma can go almost 1,691, and currently if you see, it's hovering around 800 to 900 per share. So a lot of scope still exists when it comes to Strides Pharma, and overall if you see, US business and the debt reduction are the key triggers, and of course the margins that has led to this fantastic rally by Strides Pharma.
Okay.